This video is a reply to the YouTube channel Day Trade Show. There is 57 slide presentations, including this one regarding the silver market, technical analysis, psychology with answers to some questions, and other things. There will be spelling mistakes and probably grammar errors throughout. It took me a couple hours to put this together. There's actually one slide where you see the exact same word twice and spelled differently, so there's a spelling mistake right there. Because of this, the length of the video will not be long. It will be short. However, great information should be presented. Now, the video that I'm talking about was posted on 2012, July the 10th, and it is entitled, Dear Silver Conspiracy Peoples. Quite frankly, I don't think I was one of the people he was referring to. And maybe that's because I just looked at the tags and I seen about 5 names, not one of them being myself. But I figured this was a great topic to do some videos on, answer some of the questions, go through the charts, like I said in the intros. Let's get started. In the video, between 3 seconds and 24 seconds, I hear the most obvious argument I hear every day, the most frequently used phrase day after day is the dollar is about to collapse, hyperinflation any moment now. So in red will be my comments, blue will be that from the Day Trade Show. In about to collapse, there is no way for me, or anyone else I know, to have any knowledge to not only the exact date, but rough estimate. If it was that easy, then it would not be that big of a deal in preparing for what is on the horizon. Reasons for why will be given within, other responses in this video. Regarding hyperinflation, I see myself in being very unique in that I believe hyperinflation is not only here, but is closing in on 100 years of existence in less than 2 years from now. I was not alive in the 1960s, but I had heard and researched prices. I see them in the 80s and 90s as I see them today. What other people see as hyperinflation, most likely I may define as dollar death. 31 seconds into the video, it ends at about approximately 1:20, and I'm going to quit doing the time frames for most of these later on, but regarding folks behind the scenes, it seems to me that it is a better idea for those folks controlling to give people exactly what they do not expect. They expect things to collapse, they expect the dollar to fall into the toilet. Because of this, why not give those people getting out of legal tender denominated instruments something to regret? From my observation of the human species, it does not seem that people expect it to collapse or that it will fall in the toilet. It is the vast minority that think this to be the case. You mentioned giving them something they won't expect. My observations do not see this expected by the masses, this of course being a dollar collapse. 1 minute, 22 seconds to 1:42. I don't hear anyone talking about the dollar strengthening, even a phony strengthening. It can't collapse because of some conspiracy. Bankers are controlling everything. I will be serious that I laugh when I hear people talking about dollar strengthening, because we are in hyperinflation. And I have been for 98 years. When you figure that the math guarantees debt, it makes me shake my head that this is stronger. The model contains a symptom of so many negative things for individuals in struggle mode because of this 100% guaranteed. Regarding phony strength, it is best to point out that I will only define this to be the case on the shorter term levels at this current time, and using the pure math in comparison to other legal tenders. After all, it is impossible to use the Dixie to gauge a global legal tender collapse. The actions in predicting its movements is like playing sports betting or playing Sudoku or a game requiring skill to be a winner if one chooses to play. Okay, Day Trade still watched a video a couple days ago stating prices are down because they are manipulated lower. If you think they are artificially low, then take a time machine to 1999 when they are around $4 an ounce. $4 to 27 is a stout move, outpacing all assets I can think of. In regards to the price movements of silver in all markets, I could spend all day and give you pages of reason why it's a toxic system. Leverage and derivatives are the large ones, and thus we are calculating the supply and demand of a real asset in this manner. If anything is a conspiracy, it is that silver trades fairly on a free market. Regarding silver prices, It was $1.29 and 1/3 when it was real money. It went to 25 cents in 1933, as the toxic recipe was only getting started. With silver's brother gold, metal gold, being suppressed to $35, the controls were massive. Silver stayed around $1.25 until the end of the 60s and started to make moves up to $50. The gold to silver ratio had moved to 17 to 1 at this time, with gold at $850. From the $50 silver level, that they pretty much took all of its value down the first 3 years from 80 to 82, and it went sideways in a $4 to $5 range for 20 years. When silver was $4.99, it had gained with only a bit more than 3 times of a gain since the mid-1800s. Would it have been nice to have houses for $3,500 or a Clemson education for $200? The obvious answer was that in 1999, the prices were suppressed so badly that it was a deal of a lifetime. Now, the reason why I say houses multiply 3,500 and a Clemson education for 200 is I took the prices of such back a long time ago, I think 1900, and I multiplied it by about 3.5 because that was the difference of $1.29 to 4. So you take the Clemson education from 115 years ago and multiply it by 3.5, you get 200. You take a house, multiply 3.5, it was about 3,500. With possible 130-year inflation being over 100 times already, the price today at $27, considering it is up about 20 times from the point, may be an indication that the deal of a lifetime hasn't expired yet. The moves from $50 were very interesting. More on that later on. At 4 minutes and 12 seconds, the day trade show states, if silver prices are artificially held low right now, and these internet people are saying prices are going to skyrocket at any moment with a tiny fraction of people having silver, then no one is getting hurt with lower silver prices. Bottom line is that $20 silver, if the move occurs, then the everyday mass of people, which I can only guess to be over 90%, will not even know what is going on because this never crosses their minds. It never crossed my mind when it was breaking below $4 over 10 years ago, and because of this, it makes it possible to pan out. Regarding getting hurt, it is a natural symptom to have in this debt-based economic model, guaranteed to cause debt and suffering. However, not all holders will go through hurt, for if you're forced to sell for whatever reason, then yeah, if a day shall come where people do not want those legal tenders or super hyperinflation, also dollar death comes, then they may be happy they have it. 6 minutes in. Regarding suppressed prices and why the price went higher if they wanted to keep it suppressed. Why doesn't these silver stackers just buy them out if they think it's suppressed and glory days are coming? The answer to why people do not buy them out is because of mind manipulation. People en masse do not think the dollar will collapse, nor people en masse think the dollar will survive a long time after my stout research. Well, will they one day? I don't know how powerful this mind control can work, and maybe the dumbing down may turn out victorious from the powers that be. There's a conspiracy of stupidity. There's a conspiracy to keep you stupid and keep you buying stuff at high prices when you ought, this is not out, when you ought to be waiting for lower prices to arrive. So there's a spelling mistake right there. The stupidity, as you have stated, I pretty much have, as well as the previous statement on mind control as far as chart buying and selling is concerned. I find the best method that works for me is to buy when it is deeply oversold and sell high. What makes me wonder are all the people who thought it was 100% that $50 was going to be a top. Many will say because it has went up so much that it has to pull back and correct in some form. This is something I agree with. However, timing the wins can be a very difficult job to do. And on the left-hand side is the daily silver chart from that $50 high. When the silver prices reached $50, there were contrary reports. For when this long-scale trend line broke in 2011, which is right in here, where the yellow line is, this indicated high volatility as the easiest prediction. For if key levels are not resistance in charts like this, the next target, which happens to be 75, would usually play out fairly fast. I heard those people say it was up too much, starting as low as $23 an ounce. And I think day trade show starting saying it close to 40 or 40. Actually, it was 40 or 38 or something, but around 40 we'll say. So there's a definite mistake there. My channel started that key levels of resistance were 31.42 and 41.36 with 75.78 that follows after that. Therefore, when you're bearish at 40, I was not, because I confirmed test to that of the 48.36 level. If one were to sell all their silver post $45, then they took a chance, they gambled, and they won. What they would have did had the price actually jumped to 90 and only retraced back to 50 would be a guess. However, those situations are out there as possibilities. I can admit that I felt selling over 10% at $50 was a mistake. But taking money off the table in small chunks is good, and $31 and $48 were the levels I figured have the best odds of being resistance. The reason for the 10% max is because I do not see prices that high when it technically had pierced below the 1980 high. You can say all you want about the Hunt brothers, and when logic and research shows that we have been told lies of events like 9/11, Pearl Harbor, Titanic, etc., and the blame game, it's expected they would use this as a reason to crash it harder. I do not consider this a long-term top, but when a day comes where you can hand someone a 999 silver coin, and it's rare that you have to explain to them what it is, well, then maybe it might be a top. And then you can just omit this word here. Moving on. The Day Trade Show stated, Google is a publicly traded company. They are with the bankers. If Google is publicly traded, CIA, FBI, NSA on their campus, Google is the biggest of the biggest brother, then how are they able to let these people on YouTube tell their fantastic stories about the bankers and the secret cabals and all the crazy conspiracies? If they didn't allow us to tell fantastic stories, then they would lose to another site that eventually would take over. Other sites will have a hard time driving traffic to their sites because YouTube allows for the Constitution for that of free speech. I have wondered why I can see great 911 videos starting in 2006 up to 2009 and beyond still on here with outstanding evidence and science. What is interesting is people who will say questions to 911 truthers like, why would they do this, or why would they want to? And in reality, you do not need to know why, the reason for all things to see it happen. The reason can often be important in the binary fact, which is yes, no, 1, 0, for stories given have pointed to no, 0 for being correct. Meaning, say, the 911 situation, the story of the Bin Laden and the Al-Qaeda stuff, I give it a no or a 0 on the binary code, but the Y is another different story. The fact seems that Google allows these videos and oftentimes profit via advertisements within them. It also seems clear that only a few people have been able to watch these, or at least be in good enough state to handle them and or understand them. The reason why they keep most of them is unknown from my point of view. The video Zeitgeist in Addendum and Federal Reserve form have over 10 million views on YouTube alone. These videos are also shown through different feeds, screenings, and DVDs. The video states debt to be 100% guaranteed and why, and this information just may be too hard for people to handle. When it comes down to it, I can't answer what it will take for people to figure it out, as well as how long it will take. Mainstream media is keeping people dumbed down, and YouTube does not, because you can watch videos all day about the conspiracy theories all day long. I don't think YouTube promotes the videos that are in regards to conspiracy theories. On YouTube's page, go to the sections for popular and trending and tell me how many videos you will find regarding the metals or any conspiracy for that matter. As I write this piece, I see Family Guy, excellent horse-like lady, a video game trailer, Jose Canseco, and later down from Obama's YouTube channel, why Mitt Romney hiding the rest of his tax returns, and even some All-Star Game coverage from the All-Star Game in Kansas City. You have to want to watch these videos on conspiracies to see them. If you don't type silver conspiracy or 911 inside job or how our money is made and many other search types in the search bar, then you will never get this footage. Again, many people don't want to or are scared to do so, and any other reason that, again, I could not tell you the reason why. 9.5 minutes into the video again, you asked why people would buy at the $50 top when you knew it was going to crash hard. Because you know about the conspiracy, you ought to wait. Liars are the ones who call tops and bottoms every time. For if you were a rookie at $50, then buying your first time would be considered a smart play, and eventually lucky to have your dollar cost average go lower as prices went lower. Again, who is to say that it was impossible to have a fast move to 140 silver and 2,000 gold last summer as a peak where it would then go back down to 60 or 70, maybe up to 200 back to 80. Those who sold high in percentages would get burned by selling. Those who waited for lower prices on buys also got burned. For if you sold at 50, pretty much everything, and then it goes up to 90, 100, what are you going to do now? That's getting burnt. Or if you're waiting to buy and you don't buy, and now you're up to 160, you're like, man, this sucks, and again, you're going to get burnt. Finally, the answer to why, I think I kind of had answered this previous in the video. However, I kind of can answer this one correct, and that being that would be for many different reasons, with one of the largest ones being to protect them from the dollar collapse that is already hard enough to predict a when. I know that many people make poor decisions in the game of games, and in this game, I don't think it is at all any different. This reassures me more on the investment when most people favor legal tender denomination assets. Okay, moving on. Bankers don't want you to lose money. It's for you to lose, and you to lose money when you buy high. Yes, bankers want you to lose, and they primarily do this with loans. The simplicity to how legal tenders are created state the interest can never be paid off on a tangible level because only central banks can mine fiat debt notes. By this simple scam, this is how civilians have been fucked over. Pardon my French, but I can't find a better word in that spot. We have a quarterly chart on the right-hand side. Regarding the buying high, if you're confident that the chart will eventually make a higher high in a reasonable amount of time, then you will not buy high. With this quarterly chart, it is still well above Fibonacci with a rising moving average and original support established at 26. In this situation, had one bought at $20 in March of 2008 and held through a 60% decline, that as the game plays today, they are still positive, positioned by 30%. How about buying here at $8 in 2004? Was it too high to buy? Tops and bottoms are known after the fact. Don't buy something unless it went down the day before, something that the Day Trade Show says. I'd rather say don't buy something unless you've done your own due diligence within your methodology and research. The day after August the 24th, 2010 breakout day was a great buying day, and many traders only trend in uptrends and wait for markets to stabilize and start a new pattern of higher highs and lows. By doing this, you'll always buy a decent gap from the low. Okay, now he finishes off by saying at the end of the video, the deal. I'll sell you silver at 10% over spot anytime you wish, that you are ready. As of this day, I write this, I was able to find Maple Leaf selling for a little over $1 above spot, which is which is 3% today on cash metals. I just found this site. I got to do research to see if they're reputable. They're in Canada. I'm in Canada. It works out pretty good. I would need to do more research on this company, and $3 over spot is an easy deal with that MEX currently. I do not buy now because my Fibonacci analysis says not to buy until around $21 an ounce. Okay, so now let's take a look at this chart. I got numbers on here from 1 to 9. Number 1 right in here was 3142, Fibonacci upside. That was an area to sell a little bit. Number 2, 38.2% correction, but let's be real here. The bottom was a little over 26. The correction was a little under 26. So if you're waiting to buy, quite frankly, it didn't. And I was waiting to buy at the low that never came. And I had to switch on the Friday, which meant $28 silver, I had to buy at. Because it pierced above the significant level I was looking for. Number 3 is a confirmation sign that it was going higher, because as it broke out past the key resistance field, it had this nice stabilization period here. So really breaking above 36, 37 at the time was a good time. Number 4, Fibonacci upside of 48.36, obviously key thing being the top. Number 5, a 23.6% correction. I quoted this area at $38.11. That was a losing bet. So when I talk about this bets that I do, I'm going to be giving you winners, but there's a loser right there. Number 6 was one to buy at a 38.2% correction. Number 7 happened to be a 61.8% move from route 0.4 to 0.6. Number 8 was a 61.8% correction of the entire rally, which was a buy signal, which meant the second time it hit, it was not a buy. And now what I'm waiting for is a clear break above this high or this low, which hasn't happened yet. So basically here has been a confirmed choppy action, and it will stay choppy until I have a clear major breakdown below 26 or a major breakout above 36. Well, 37, whatever. It's in that area. So the next buy signal is around 20. Therefore, I will buy on either a confirmed uptrend or a test of 20. I will use the best strategy that I can find at the time, and 10% over spot is not that great of a deal. What I don't go over much on this channel is the game of bartering, and if someone offers 10% over, then the wise one are the people who get that number down to 2 or 3%. That's all about bartering. Someone gives you a deal, you go lower. That's just simple mathematics. The rest of the way, I'm going to be going through some of my Fibonacci analysis, different ways. This is a game like bridge, spades, golf, chess, and many others that share the common trait of needing skill or talent to win. There are only a small amount of people who can successfully do very well at the game. I like the straightforward methodology of waiting for a setup to come to you as I found in these Dow Jones charts. Long at 12,141, which is the bottom of the big red candle, place a stop at around 11,950. This was a 38.2% retracement. I was just waiting for it to hit this line. When it was down in here, I'm like, yeah, just wait. It's pretty much confirming that it's going to 12.14 or 12.100, so just wait. Boom, it hit there. Order was sold at 12,517. The risk was under 200 points and reward is over 350 points. The wager was successful for a 3% gain on single leverage. This was a sell order right there because it was a 38.2% retracement from this high and this low. Short at Dow Jones 12,825. This is 61% of the retracement since the recent top of the market. The stop at around 12,940. The sell cover was at 12,517, this orange box, for a reward of 308 points. Original risk was around 115. Maybe one may want to stop above 13,000 or 200 points to keep them under the psychological number. When you have many choices for decisions in the game, then it can reflect the skill factor it contains. There's so many decisions you got to choose here that, yeah, there's a lot of skill. There's a lot of skill. So therefore, both are winning bets. However, the setups are done and you wait for another setup to appear. The method is to get out a few periods from where you get in. In this case, the long lasted 4 days and the short was a duration of 4 days as well. Sometimes it can be longer or shorter. Because of the multiple time frames, you can use this method within long-term analysis. Okay, Fibonacci analysis on this started to go long in 1983 at 665, right here where it hit this line. Had one played the low of $1.25 for Fibonacci rather than 25 cents, which is right here, that success would have been even better with a few good longs and shorts. Quite frankly, this isn't that great. This wasn't a great workout because that was a big scare move down here, which could have affected a few stops. Had one bought in 1983 and they had their stop loss under 350, then the wait was 28 years, 28 periods longer than normal, but it was a winner because question is, if you're buying here, you're planning to sell either here or here. So either way, you got it. There's no need for stop losses in this setup using math. The reason is because you are playing for a $20 to $40 gain and your cost was 6. When gains exceed 200%, you only need to win greater than 33% of the time to break even. Back to the chart. If the analysis left is how the $50 holds, and if it needs to correct to 665, then the last two candles sideways are resembling that of 2007, 2009. Let me state that more clearly. If the market needs to correct, a lot of the time it's 38.2%. 38.2% from the 1933 lows and the 1980 highs is that of 665. It's already done that correction once already. So the question is, would it do a second time? Would it have a shorter correction or one down to about 20? But it's also resembling 2007-9, which is here, this little area here, where it went sideways after it had its breakout above 8. And now it had its break. It's been sideways now for 2 periods. Now, very similar pattern in a test of all-time highs not seen in many years. It had a decent price correction and rallied back to the previous high. Back then, the previous high was not resistance, rather support to a massive liftoff. This is pretty much the same. You got this here, you got this here. You had a high not seen in a long time. Question was silver too high here? If this market does not sell off below 19, which is below here, then the correction on the yearly is very small, or there will be one heck of a time correction, which is 5 to 20 years. That's 5 to 20 years of going sideways in a range from like 24 to like 50 or something. I'm looking to see what happens on a break past 50. It can explode from here because that is what bull markets do. Dow breaks 1,000 and explodes, as did silver breaking 150 in the 1970s. Now, the reason why I put the end in here is because I don't know what my last chart was, but this is the last one. The end, and have yourself a nice day.